So this time we want to talk about our recent upgrade of the Russian market. And admittedly, that is the most bullish outlook that we have produced in years on Russian stocks. So why is that? Why is the upside in dollar terms within next 12 months, 18 months and forward is more than 30% for the Russian market, for the RTS index? The current target price, we pushed up from 1380 to 1670. And 2/3 of this upside is concentrated in just 4 names. 3 of them, the state-owned companies, and 1 of them is the private one, which is Lukoil, and the state-owned companies, Sberbank, Gazprom, and Tatneft. We believe that ultimately, in the era of very low rates globally, and perhaps rates, especially in the US in dollar terms, staying low for the foreseeable future, let's say 2 years forward, if we trust the Fed, and we have to trust the Fed, 2022 and beyond, and in Russia, the historical post-Soviet low in terms of the interest rate as well. And as we write this video, the Russian central bank is about to announce its policy decision on rates, and we expect another 25 bips cut. So that all taken together makes Russian stock valuations, cheap valuations, shine in the world. And most importantly, the translation channel for value unlocking is going to be the dividends. And we believe that the state will ultimately push through at least 50% payout from the state companies, and private companies are already following suit. When the economy is not growing that big, and we don't expect it's going to be super strong, in the years ahead, then pay out as much profits as you can to your shareholders. And Russia can't do that. That's why we believe this recession is going to be over in a quarter, in 2 quarters, definitely by 2021, and low rates will stay. So this taken together creates a very solid case for Russia to finally come catching up and realizing the value. For the time being, and as you can see on this graph, in terms of current valuations for the market, we are more neutral or cautious, I would say, on the market, as current PE is about 18 times for the RTS, and that's quite high on the back of falling profits primarily in the oil companies. However, similar thing you would see on this graph, and that shows the MSCI EM price earnings ratio as well, which is also spiking because of the falling profits. Yet, look at this graph number 3, where we show the point difference between the Russia rates. Actually, this is the Eurobond yield, long-term Russia Eurobond, versus the dividend yield of the market. And as you can see, it's not being that decent, not being that attractive for years, as opposed to MSCI EM or the S&P. So Russia dividends is the central case. State-owned enterprises, value unlocking, ultimately in the low rate environment. Again, it's more about if it's going to be unlocked rather than when, because the denominator, your discount factor for the cash flows is as low as it can be. So it's about value in the future that's there, perhaps not for the time being, but we acknowledge that it's large, and we like the stocks in the long term.